at the time of execution to dispatch of various components of the turbine and the turbine components reaching upon site. So based on the various milestones defined in the agreement, we receive a chunk of the payment. I mean, I don't want to say the percentage in terms of payment that is received till turbine reaches site, but fair to assume that a large chunk of the payment is received by the company upon commissioning or erection of the turbine.
Also, please understand our supply contract is different from installation contract. These two are independent contracts. So in supply contract, you have independent payment terms, but there could be some payment linked to the commissioning. In as and when commissioning happens, even if that is a separate contract. So supply contract runs independent of installation. That's a separate contract. And in fact, if we have a full EPC, there again, BOP contract is independent.
Understood.
And if we're doing land contract is independent. These all contracts are independent. They don't talk to each other in terms of LDs or anything. Payment terms are.
Okay. And so just a final question. A global peer is looking to sell its India business. So will we be looking to acquire?
First part of it, are you looking at it? We are looking at it. It's like everybody is looking, we are looking at it. Are we looking at it to acquire? I don't think so. That's the, let's see that what happens.
Okay, sure.
There is no definitive answer of yes or no for that.
Understood, sir. Thank you and all the very best.
Thank you so much. The next question is from the line of Dhaval Doshi, Diamond Asia. Please go ahead, sir.
Congratulations on a good set of numbers. I'm sorry if I would have missed this point, but can you just touch upon what is the current pipeline looking at in terms of the bids that we've submitted? Secondly, what kind of inflow numbers do we expect to go through as far as this year is concerned? I know you won't give me an exact guidance on this, but some color in terms of how do you see things for this year?
No, first thing is we don't submit any bids. If you're talking about the government-run bids, we don't participate in that bidding. Those are IPPs which run the bids, and then IPPs come to us for equipment supply contract. Only bids we participate is the public sector for selecting equipment supplier. They run a bid, like NTPC, which was the question previously. That's where earlier we were not participating because we were not able to meet the financial criteria. Now we meet that and we started participating in the bids for NTPC and other public sectors. That's the only bids we participate where there is a bid for equipment supply. Generally, private sector doesn't run a bid. They just invite you to discuss.
So if I have to rephrase my question, what are the kind of tie-ups or that we could have for which either the IPP or Suzlon itself is under various bidding process, and we could expect some kind of an outcome?
Yes, nobody does. Yeah, nobody does that. That arena has gone where people used to have a pre-bid tie-up. In the initial stages of SECI 1, SECI 2, SECI 3, maybe up to 5, 6 people used to have pre-bid tie-up. But now every IPP is experienced, they know the pricing. So they will talk to you at the most for some budgetary cost, but they take their own judgment on what would be the EPC price, the equipment price, and go ahead and bid. If they win the bid, then they'll come and talk to us, saying that, will you please supply and negotiate a contract. There is no pre-bid arrangement per se in anymore on this. It used to be there earlier. We did have many pre-bid things, but in the current system, it doesn't exist. So people bid on their own without any pre-bid tie-up.
Okay. Some sense on what could be the order inflow for the year and the time frame over which the existing order book needs to be executed?
What is going to come, obviously you will know whenever it comes, and we keep announcing it. So therefore, you would see that there is a large, like Himanshu mentioned it in opening comments. There are a large pipeline which under discussion on the table, but till it is closed, contract signed, and we receive confirmed advance, then obviously we don't take that as an order. So there is no point in talking about how much is under discussion. There is substantial amount which is under discussion.
No, so what I was referring to was the kind of order inflow that we are budgeting or we are targeting, some sense of numbers, some growth numbers, and the time frame over which the existing 3.8 gigawatt needs to be executed? Two separate
3.8
questions.
gigawatt, the 3.8 gigawatt is between this year and the next year, most of it. Some part of it would be early FY27.
Okay. And on the order inflow, so any targets that you would want to give or?
No. No guidance on that, please.
Thank you so much.
Thank you so
But
much.
again, as I said, that just to reconfirm, orders need not be monitored currently. But there are enough orders. It's a question of how much we want to pick up, and that is the reason in the opening comments, we also mentioned that we are looking at orders where we think as a confirmed offtake would be there in a given definitive timeline. Our offtake will always be there, but is there a definitive timeline, and what is the quality of that order? That's important for us now.
So can I squeeze in one more question, if it's okay?
Yeah, go ahead.
Yeah. You mentioned the executable capacity that we have is close to 3.5 to 4 gigawatt, right? Was that number correct?
Manufacturing capacity.
Manufacturing capacity.
We asked about manufacturing capacity.
And we're looking at expanding this probably in FY26.
Yes.
What would that typically be, sir, the expansion?
We are looking at, obviously, that would, again, you will indirectly draw how much is we are targeting the orders. So therefore, let's leave it there. We are expanding it. So once the expansion is completed, we will let you know what capacity we are for FY26.
Okay. Thank you.
Thank you so much, Mr. Doshi. The next question is from the line of Dhruv Muchal, HDFC AMC. Please go ahead, sir.
Yes, sir. Thank you. So just one clarification, you mentioned that the developers no longer do pre-bid tie-ups. So does the assessment of what PLF they will generate, kind of wind profile, that's all independent by them, and then they select the equipment which they have to? Is that how it works?
See, they generally, what happens is that people are now, some of them are developing their own sites. Okay. Some IPPs, obviously, they know what is the PLF likely to be there based on the wind data if they have it. There are one set of IPPs all alike. Second set of IPPs, they don't finalize with you, but they sit with you, or maybe they'll sit with a couple of more suppliers and then ask a budgetary quote saying that, do you have a site? What would be the budgetary quote? But not finalize, firm up the order. So they will take some sort of a thing from the market test and then go ahead and do it.
Okay. Got it. Understood.
Because most of the people today are, doing multiple projects. They've been in the sector, so therefore, experience for them is much different today.
All right. Sure. And the second question was on the contribution margins. So, probably a bit early, we have started delivering the new turbines. But do we still stick to our guidance? I think the numbers are relatively better than what we were guiding. So, but do we still stick to the guidance of, I think, 90 lakhs per megawatt? Is that, does that remain, or do we see an upside to that number based on the run rates that we are achieving and based on the actual deliveries now?
So, we're maintaining that, our average selling price is, close to about, average is about 6 crores per megawatt. It, of course, differs quarter to quarter. And based on our margins, which we've said is, mid to late teens, whether that's 90 lakhs or close to a crore, would be the contribution margin. So, if we sort of end up doing, of course, 20% margins on a ASP of about 6 crores, that's about 1.2 crores. But, there may be a playoff where, we may be a little shy of 6 crores, but we would have improved margins. So therefore, I don't want to comment on 90 lakhs or 1 crore or whatever that number is, but that's where we are.
Okay. So ideally, we should look at on a percentage basis. Is that the right way to think of it, or should it be absolute, the way it works?
You should look at it as a percentage basis of our, overall revenue.
Okay. And say, for example, if I look at the revenues right now for the quarter, if I just do a division by the deliveries, it's about 5.5 crores. I understand it will never be the installations and deliveries will never be exact, but assuming the installations were also done all through, equally, what the realization number would have been? I'm just trying to understand. You mentioned the contribution margin would have been 20%, but what the realization would have been?
No. So as I said, 20% was just math that I walked you through. I'm not saying that it would have been 20%.
Around
And
that number, yeah.
yeah, around that. So and in terms of calculations, of course, if you see our average selling price over the quarters, it's been a little shy of 6 crores. So anywhere between 5.8 to 6 crores has been the average, which is what is about close to 5.5 crores in Q1 this year. So of course, had the commissioning happened to a larger extent, for the 160 shortfall, we would have got close to the 5.8 to 6 crore average.
Got it. Got it. And this last question is, what are the deliveries that we have done cumulatively? What are the installation spending for our deliveries? You mentioned that system has a lot of this gap, but how much is this for us?
Our turbines, including whatever the latest deliveries what we have done, it would be anywhere close to about 800 megawatts is what is pending for commissioning.
So about, close to 700 megawatts. So 720 megawatts to be precise, is what is pending, uncommissioned, cumulative out of all the deliveries.
Including the deliveries this quarter.
Yeah.
Yeah. So 700 megawatt which have been delivered to the site, but pending for just the grid connection and related.
No. We didn't say that. 700 is delivered. Some of them is still to be, this 273 which has gone, many of them may not even been erected. So there are different stages.
Oh, okay.
What we talked about was only the 230 megawatts out of this, which we erected and pre-commissioned all the things. Only 70 megawatt has been done. So in the 770, 160 megawatt is what you can actually count as the turbines, which are ready for commissioning but could not be commissioned because of the constraints in the 720.
Okay. Got it. Makes sense. Got it. Thanks so much, and all the best.
Thank you. The next question is from the line of Vivek Surekha, individual investor. Please go ahead.
Hi. Thanks for this opportunity. I'm audible?
Yeah. Please go ahead.
Yeah. So, sir, just one question. On the OMS side, are there any plans to list this separately and capitalize on the current scenario?
No, there are no such plans.
Okay. Thank you.
Thank you. The next question is from the line of Yash, Stallion Asset. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. So my question is that I think you've made 8% EBIT margins on your WTG segment this quarter. Do you think we have scope for improving the margins further, or this is a sustainable level?
So, the difficult one to say, but yes, I mean, we are seeing that the economies of scale and the volume play is playing out. So, whatever historical margins that we've seen, thin margins that we've seen, is hopefully a thing of the past. So, our sense is that, these EBIT margins close to this region should be able to play out over the next few quarters.
Sure. And I just wanted to confirm this again. So you're targeting 5 to 5.5 gigawatt order book this year. Is that what I heard right? Sorry, I was just joined late in the call.
We said that as a country, we will be adding 5 to 5.5 gigawatts of wind capacity this year as a country.
Okay. And you'll maintain your market share of over 30%, or is there a scope to increase that further?
If I say that, I'm giving you the guidance anyway. Let's hope so.
Okay. Thank you.
Thank you so much, Mr. Yash. The next question is from the line of Neha Menon, NVS Brokerage Private Limited. Please go ahead, ma'am.
Good evening, sir. Congratulations on your performance.
Thank you.
Wanted to get some... Hello?
Yeah, please go ahead.
Yeah, just wanted to get some clarity again on, so regardless of the order book that we have each year, what is our annual installation target, or you may say average installation capacity?
It's not an installation capacity which would vary on various factors outside on this. What we talk about is that what is our manufacturing capacity, means what is our supply capacity. This is what we mentioned. Currently, we can supply anywhere between 3.5 to 4 gigawatts.
Okay.
And which would expand further.
Okay, sir. Yeah. Thank you.
Thank you.
Thank you, Ms. Menon. The next question is from the line of Pratik Giri, Shubh Labh Research. Please go ahead, sir.
Hi, am I audible?
Yeah, you are. Please go ahead.
Thank you. Sir, congratulations on good set of numbers. I have one small query. Recently, we read about Niti Aayog, trying to indigenize the wind energy equipments which are there. So I was just trying to understand currently in the entire bill of material, how much of that BOM is actually import dependent?
For us, it's not applicable because we are much above the number what they're talking about. Our import, our domestic component is much, much higher than what they're talking about. So this is basically meant for other players. That's a non-issue for Suzlon.
Understood, sir. Very helpful. Thank you, sir. That's it from my side.
Thank you, Mr. Giri. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Preet Nageris, Wealth Finserv. Please go ahead, sir.
Yes, hi. So the question, sir, I wanted to better understand is that you were saying there's a huge C&I pipeline, and you mentioned something between 15 to 20 gigawatts of that pipeline. So can you tell me what is the driving factor which is leading to such a demand?
No, the 15 to 20 gigawatt, what I mentioned was the bids invited by the government agencies.
Okay.
So that is what is the number what I talked about. So obviously, if you look at on the wind capacity side, currently we're at 46 megawatts. So the requirement to meet on the least cost option, the demand projections for 2030 on a least cost option is wind has to reach 100 gigawatts. So there is a 54 gigawatts of capacity addition has to happen in this 6-year period. So therefore, to meet that is what government is actually planning everything. Because if you want to meet by 2030 that much of it, most of it should be awarded, let's say, if that is FY30, so FY28, you should complete all the awards. So I think our expectation is that awards would be completed even much before that. So, but then depending upon the execution, like last time we mentioned, if not 100, our expectation is we will reach somewhere 90-95 gigawatt definitely by 2030.
Okay. So, but the CI component is also very strong. So what is driving the CI?
C&I component, C&I component is the simple reason C&I is raising is that most of these large industries want to move away from fossil fuel if they already have a fossil fuel captive capacity, or they are right now driving the grid into a captive capacity. People are switching over from fossil to renewables because one is a tariff arbitrage compared to the fossil, because you know that any one of them, if they have a coal-based capacity, that coal is very expensive for captive plants. Okay? They need to buy the coal in the e-auction. They don't get the linkage. So therefore, arbitrage is one, and number two is that if you need to export your product outside of India, so this is now becoming more and more restricted that your product has to be green. So mainly the tariff arbitrage, but otherwise also their own targets for carbon footprint. That's why C&I. In fact, if you see that not just here, everywhere it's happening. Even if you look at US, the largest capacities signed today are by people like Google, Meta, and Amazon and type of people. So gigawatts and gigawatts of capacities of PPAs they're signing there to buy. So it's a global phenomenon where everybody is working on this. And the tariff arbitrage is really helping.
I see. And sir, how do you see the impact of pump storage or hydrogen projects or battery-enabled storage solutions? How does that help out for wind projects? If you can share with me.
See, the pump storage, it's nothing to do with the hydrogen. Hydrogen can also help, but also what we are now moving is that from individual solar and wind we move to the hybrid. And from the hybrid now we are moving to the round the clock, what is called the firm and dispatchable renewable energy. That means instead of the intermittent power supply, the renewable energy, if you want to compete and replace fossil fuel, should also be able to generate on demand the way the fossil fuel generates. So therefore, in the fossil fuel, what happens is that you you give your capacity on a 15-minute basis, and you respond to the demand on a 15-minute block basis. So now, the similar thing is what the bidding is happening in renewables, where you need wind, you need solar, plus you need the storage. Current options for storage could be either the battery or the pumped storage, or could be any other way. But having said that, this because of this storage system, because we also need a stable power supply for hydrogen, it also helps the hydrogen sector. But it's more pumped storage, or the storage is basically to make the renewable into a not an intermittent power supplier, but supplier on demand 24/7.
I see, sir. So you feel that all these initiatives are basically an enabler for the wind sector as well?
Sorry? Come again?
Would you say that all these initiatives and technologies are also enabling the demand in the wind sector?
Yeah. See, today, if a load following FDRE bid, okay? When I say load following is that your client, if it's an utility company or if it is a C&I company, can give you what is the load profile on a 15-minute block basis for 8760 hours in a year, and you're supposed to set up capacity. If your PPA is for 200 megawatts to supply, okay, so on this basis, your wind capacity concerned requirement would be anywhere between 2.1 to 2.4 times. So that's the extent of wind capacity what you need to make the power on an FDRE basis. So if it is only the peak, not the load following type of FDRE bids, then it would be anywhere between 1.4 to 1.5 times. So today, what is happening, why wind has to grow, is that every single project, what is being executed or what is being bidded out, are a combined projects of wind, solar, or wind, solar, and storage. So therefore, the project can only get commissioned provided wind also gets commissioned, because it's an integral part of a project. So therefore, today we reach a stage where how much wind capacity is commissioned would decide the total RE capacity getting commissioned. That's why wind is becoming critical. That's the reason you see more and more attention of government towards removing the bottlenecks for wind sector.
Wonderful. Thank you so much, sir, for explaining, and wishing you all the best.
Thank you.
Thank you, sir. The next question is from the line of Dipesh Kashyap from Invesco MS. Please go ahead, sir.
Yeah, hi team. Thanks for the opportunity. So I'm looking at slide 22. I just want to understand what causes this volatility in the contribution margins. Is it the mix of O&M and WTG?
Yes, Dipesh. So, as the share of business of the WTG goes up in the consolidated pie, the contribution margin on a consolidated basis will, of course, keep reducing, because as you know, the contribution margin in O&M is at almost about 65-66%, whereas in WTG for this quarter it has been about close to 23%. So in the overall revenue pie, the more the WTG business, the consolidated contribution margins would keep reducing.
Understood. And the fixed expenses that are below this, right, employee and other expenses, I see that other expenses are constant year on year. So how do you expect them to grow? Like, will it be fair to take it like 10-15% increase year on year?
Yeah, I think that's a fair estimate, about 10% increase, because, of course, correction in sort of operating costs plus certain employee cost. In addition to that, we are also incurring certain one-time operating expenses this year in, getting our systems and processes right by engaging various consultants. So that may attract, some small capex and one-time P&L costs as well, which may look a little, the fixed cost may look a little inflated for this year. But I think those are one-time costs for long-term benefit of the organization. Although they may not move the needle significantly, but your assessment is correct. About 10-15% increase on the fixed cost is what you should assume.
Understood. And secondly, sir, your current EPC mix is around 33-odd%, I think, if I remember it correctly. How do you expect it to grow with your order book that is in the pipeline?
Yeah, it's actually growing. We have been at around 23-24%. Now it has come to 33%. As our development, land development, what we talked about earlier, in advanced land development, if, as that keeps increasing, so that our EPC percentage should increase.
And so how should we think about the working capital then? Because I think the working capital days have been a little stickier. They have not been coming down. So as the EPC contribution increases, do you expect to worsen further, or how should we think about it?
These two are not related.
So yeah, whilst these two are not directly related, Dipesh, but working capital is something that we said we are working on constantly, and you may not see a significant improvement quarter-over-quarter, as in 1 or 2 quarters, but directionally we are striving towards improving the working capital mix. As I've always maintained, we don't want to give a target and as to what the NWC will be and by when, but rest assured we are working on optimizing the working capital mix for the company.
Got it, sir. Thank you and all the best.
Thank you so much, Mr. Kashyap. The next question is from the line of Manoj, individual investor. Please go ahead, sir.
Congratulations for the good set of numbers. I have a couple of questions. One is regarding the exit of Siemens Gamesa. So how it impacts our market share? How much we can tentatively it might increase?
Sorry, so your voice is muffled, Manoj. Very difficult to hear you.
Is it better now?
No, we cannot hear you.
Is it still?
Yeah, now it's better. So let's try one time.
Yeah. So the first question, regarding the exit of Siemens Gamesa in India. Okay. So how much market share, will it increase in case of Suzlon? And the other one is, regarding the offshore business, right? We have a government has announced a viable gap funding regarding that offshore business. So, can you throw some light on the offshore development project? How are we going to develop that in the future?
Siemens Gamesa will not have any impact on our market share because we were never under pressure because them in the recent past about market share. So therefore, I don't think anything is going to happen because of their exit. As far as the turbine supplies are concerned, okay? I'm not talking about the service business. I'm only talking about the supply business. As far as offshore is concerned, yes, there is a 1,000 megawatt viability gap funding, but these projects bidding and ultimately actual execution is 4 to 5 years away. So therefore, right now, for the immediate future of next 4-5 years, the offshore is not going to move the needle for Suzlon.
So, but that's the future, right? I can assume, right?
Yeah. No, the future, it all depends. Like we explained earlier, the offshore in India is different from offshore outside India. In case of India, the generation gap between onshore to offshore is not significantly different compared to what is in Europe and other places. Generation gap not being very high means PLF not being much different, but the cost being very high. So therefore, cost of generation today, as we see today in the offshore, is very high, so anywhere between 7 to 8 rupees. So therefore, that sort of levels at this stage, I don't think you could actually go and sell the power unless there is a viability gap funding, and viability gap funding can come only for initial set of projects to encourage offshore to happen. So offshore to become a significant potential for us or for any player is still far away. So while we are prepared, we're not saying that we will not get prepared, and we're preparing because we do have an experience of offshore as part of when RE Power was part of us. In fact, they are including our current Chief Technology Officer. Everybody is well experienced in offshore. We are prepared for that, but for a guidance purpose, I don't think it's going to change needle much in the near future.
Thank you. Thank you, sir. Thank you so much for the information. Thank you.
Thank you, Manoj. The next question is from Sumukha Jamandi, which will be the last question for the day. Please go ahead.
Hi, good evening, everyone. Thanks for the opportunity. I've been a long-term investor, retail investor for Suzlon. It's good to see the comeback from Suzlon from pre-COVID era to post-COVID era. Having said that, on a slightly negative tone, please excuse me if it's a repetitive question. Suzlon has been receiving a lot of penalty from the customs, etc. So what has been done in this regard to prevent this from happening? I understand they will be appealed in courts. And just a follow-up on that, has the